Hi there, this is Tom Lee. I am the Chief Investment Officer of Fundstrat Capital and the Portfolio Manager for the Fundstrat US Large Cap Granny Shots ETF. Thank you for joining us for this monthly webinar. I'm going to be giving you some introductory comments, talking about AI and some trends we're seeing, and then I'll turn it over to Ken to go over his commentary around the rebalance of the Granny Shots ETF. Let me just start with some basics. There are quite a number of slides, and so let me just walk you through these. So let's start with just some of the basics. The NAV of the GRNY ETF is $21.09. The price is $21.10, and total assets are about $900 million. In terms of year-to-date performance, the GRNY is up about 5.7%. That compares to the S&P up 4.11%, or relative outperformance of about 156 basis points. Since inception, the GRNY ETF is up 5.5% on a price basis. That compares to 3.53% for the S&P 500, and that's relative performance of 193 basis points. What I wanted to talk about on this webinar is the fact that the 2025 AI trade is broadening. And what I mean by that is, if you look at the Mag 7, and that refers to the 7 companies that have been associated with the AI trade, year to date, only 3 of them are outperforming, only 3 of them are up year to date. And really, of any significance is Meta, which is up 23%, and everything else is either basically up slightly or down. And in fact, Meta is the only Mag 7 stock outperforming the S&P 500. In fact, it looks like a year where the market is broadening. So this chart from Yahoo shows the percentage of stocks outperforming the index, and the figure year to date so far is around 48%. And you can see it's meaningfully better than the roughly 30% seen in 2023 and 2024. So I think it's the surest sign that not only is the market broadening, but the AI trade is broadening. Now, there is a lot of stocks that are in this ecosystem for AI. This is just from Bessemer Venture Partners, and you can see there's a huge number of stocks. But let me sort of pull back a little bit and say, what are the use cases for AI? The first is job automation. And that's simply just saying that, well, AI is going to be able to do some things better than other people and replace their jobs. The second use case for AI is accelerating discovery, because now you have these tools, just like a calculator allows you to actually make better computations. This is the idea behind AI. The third is that you're going to be able to augment your creativity and productivity. This means it's working side by side with you and allowing you to do more with your existing tools, and especially with AI. And finally, I think a final use case is that it's going to eliminate language barriers and really improve global communications. I mean, if you think about that, that's really a huge obstacle to sort of seamless transfer of information between countries and languages. Now, of these, I would say that the one that's most practical today, because it's tangible, is the idea of job automation, and in a way that is reminiscent to us of the early days of wireless, which was about substitution of cell phones for landline. Now, we know companies are pretty serious about adopting AI or spending across AI. This is from BCG, but you can see that 1 in 3 companies in the US are planning to spend $25 million, wow, on AI in 2025. And Y Combinator is primarily only focused on funding projects that are going to replace high salary jobs. So this is really the focus. And this is from Tireless Ken, that if you look at just the top 20 industries most vulnerable to AI displacement, he estimates that you could have as much as 18 million jobs replaced in the US, and that's about $1 trillion a year in wages. So clearly, from a practical perspective, you can see why companies are kind of rushing to look at these opportunities. So what does this mean if we think about mobile phones and how it plays for AI today? Well, I actually started covering the wireless industry in 1993, but our first wireless major industry report was in 94. And at that time, there were only 56 million cell phones. So the industry has grown parabolically to 9 billion today. So by more than a factor of 100. And in the US, it was not until 2004, so 10 years after that report, that the number of cell phones exceeded the number of landline phones, as you can see on this chart. And the number of cell phones continued to grow, far exceeding the number of landlines that ever were in the US. The revenue crossover took another 2 years, not until 2006. But here's what's interesting. Just keep those dates in mind, 2004, 2006. The wireless industry stocks relative to the broader market peaked in 2000, as you can see here. So even though there was still many, many years, decades of growth ahead for the wireless industry, on a relative performance basis, the industry in aggregate peaked just 10 years or so into the industry's inception. And if you're wondering what the wireless ecosystem was, it was the carriers, the network infrastructure providers, the tower stocks, the chip makers, handset makers, and operating system companies. But as you can see here on this chart, they all peaked at around the same time, just around the year 2000. But that's not the whole story, because I show a chart that shows that they never all began to outperform the S&P. That's true, but there were a couple of long-term winners. The first one is the tower industry, which might surprise you, but the tower industry wasn't the cutting edge of technology for wireless, but they were what I'd call a middleware provider. They provided a service that grew on a units basis, actually arguably exponentially with the wireless industry's growth, and they maintained pricing power. That's why those stocks did well. And the second long-term winner is Apple. They didn't emerge in the industry until 2007, so fully 17 years after the industry's inception. But as you can see, both from a stock perspective and profits perspective, Apple just not only disrupted the industry, but they captured a lot of value. So that's a takeaway, that as you have to be flexible as this AI landscape unfolds, knowing that there can be differences between near-term winners and long-term winners. And that's actually ties back to why I think it's important to think of our approach as a granny shot. And to remind you, a granny shot is referring to a type of unconventional free throw that's shot underhanded, which is a correct physics way to do it, but like someone like Rick Barry had tremendous success, 90% win rate, NBA Hall of Famer. And the way we do granny shots is we look at 4 strong and secular themes: millennials, AI, cybersecurity, and easing financial conditions, as well as what I call tactical themes like style tilt, seasonality, and the fact that the PMIs are recovering. And we find stocks that are not only in these individual themes, but have to appear in multiple themes. And that's what makes a granny shot. So this is how we think you can get the best high quality exposure to some of these important ideas. Now I'm going to turn it over to Ken to talk about the granny shot rebalance.
Thanks, Tom. Hello, everyone. This is Ken Xuan, the co-portfolio manager of the Fundstrat Granny Shots US Large Cap ETF, ticker GRNY. Welcome to our 3rd monthly webinar. And as you might be aware, we just conducted our first rebalance on February 5th after the market close. So for my part, I will give you a quick update of our fund performance and then go through with you our recent rebalance. Let me share my screen. Okay, so year to date, our fund has been up by 4.56%. As of February 5th, right before our rebalance. During the same period, the S&P 500 Total Return Index has been up by 3.15%. So, relative speaking, our fund has beat the market by 141 bips. And if you're looking at since inception, our fund has been up by 4.35%, and during the same period, S&P 500 index being up by 2.57%. So relative speaking, we outperformed the S&P 500 total return index by 178 bips. And if we're looking at the risk attribution, return attribution, majority of our outperformance is from stock selection. And of course, the sector allocation also provide like around 13 bips of outperformance. But industrial actually has been one of the biggest lagger of our fund, partially because our overweight in industrial, and also, some of our holdings like TransDigm and Leidos has been hurt by the Doge initiative and also, overall government cost saving backdrop. And also some industrial holdings we had, which leverage to the AI, also get hit recently by the DeepSeek news. So as you can see, industrial has been the lagger. Other than industrial, I think majority of our sector, allocation and stock selection has been doing pretty well. This is the holding performance. This is holding before the rebalance. The list is sorted by the performance since inception. And as you can see, the top best performer has been Axon Enterprise, Tesla, CrowdStrike, Netflix, and Meta. And the worst performer has been Leidos, AMD, Nvidia, Caterpillar, and Grainger. And here are the 7 removal we had in this most recent rebalance. Speaking about removal, let's change our topic to the rebalance. So first of all, a quick review of our Granny Shots if you are new to this. So for our Granny Shot ETF, there are actually 7 underlying themes. So there are 3 short-term themes. We have style tilt, seasonality, PMI recovery, and there are 4 long-term themes. They are the energy cybersecurity, the millennial, the rising generation, the global labor supplier, and finally the easing financial conditions. So the idea of Granny Shot is to be each of the theme have their own sub portfolios. So if a stock is appear in more than 2 of the 7 themes portfolios, it will be included into the final Granny Shot ETF holdings. So then when we do the rebalance, we actually it's kind of follow the similar methodology. For the short-term themes, we rebalance them every 3 months. We want to update with the most timely style, most timely industry, and most timely ideas within the PMI recovery theme. And for the long-term theme, we don't really do rebalance every 3 months because they are really designed to capture the long-term macro tailwind. Therefore, we want to hold them for a long time. But every rebalance, when we do the rebalance, we do review if the stock is still a good representative of the themes. So, after we finish the rebalance, we just follow the same methodology I mentioned earlier. To be a stock, then we look at the stock. If the stock appear in more than 2 of the 7 themes I mentioned, I'm showing here the 7 themes here, then it will be included as the updated Granny Shots portfolios. And so, therefore, in summary, there are a few reasons that a stock could be added or to be deleted from our portfolio. Here I list 4 most common ones. The first one is if it's due to the change of the themes. If you are familiar with if you follow our research, you probably will remember that before we launch this Granny Shot into an ETF, when this is still a research product, we actually have one theme called asset intensity, which is designed to capture the rising inflation. But in early 2014, we think now the Fed is entering that kind of easing financial condition regime. Therefore, we replace that asset intensity, which is inflation theme, into this easing financial themes, which is still intact here. So that change of the theme itself could result in the change of the holdings. Then the second one is really like, as I mentioned earlier, if we want to make sure the stock is a good representative of the themes. Let me give you a very extreme. Well, let me just give you very extreme examples. Let's say if Tesla one day stop making EVs, stop doing those kind of robotaxi, robotics, if say Tesla one day suddenly open a restaurant, so then we probably will to revisit our global labor supplier theme and to probably remove Tesla from that theme because it's no longer, you know, an AI play. Again, I'm just giving an example here. So that's the second one. So it's kind of the reason between theme and the stocks. The third one is really is about the stock itself. You know, it's so at each rebalance we do review the stocks, the entire universe, to find out the one we favor the most, we think has the highest chance to outperform. If the stock is no longer from the risk reward perspective, if it's no longer favored by our investment team, the stock could be removed, vice versa. And also finally, it's actually pretty common that if the stock is added or deleted from the investable universe, it could also result into the change of the holdings. So let's talk about the removals. So here, like first of all, like CBR and bookings, the reason why they get removed is really because of their industry is no longer favored by our seasonality theme. But if you're really looking at those two stocks, I think they're still favored by our investment team actually. Like CBR is probably one of the best stocks within the real estate sectors. Booking itself, the travel industry is still pretty strong. Even if you look at the recent CPI report, other than car-related shelters, airfare and hotel has been really one of the, even admission has been one of the driving force of the CPI. So I don't think anything wrong with the travel industry. Again, the reason why we removed bookings purely because the industry is no longer favored by our seasonality themes. So and the other five is really because of the stock level. Johnson Control, I think it's still a quality firm, especially the recent earning has been pretty good. We just thinking within the style to the theme, there are more names to be more favored. And that's why after the strong rally post the earnings, so we decide to cut the positions. And TransDigm and Ledos, as I mentioned earlier, they are really not really Doge or not Doge. It's really this kind of backdrop of government cost saving. I think just create a lot of uncertainty, and also those two stocks have pretty weak technicals. Therefore, we kind of remove those two. And IR and Granger is kind of similar. It's just not favored by our model, and especially Granger has a very weak earnings, and I just think in the near term risk rewards is not that strong. So after talking about the removal, let's talk about the additions. Again, just want to repeat myself. Every 3 months we update our short-term themes. Then we kind of combine it with our long-term theme together to find the stocks that appear in more than 2 of the 7s to be included into our final Granny Shots holdings. So let's talk about the short-term themes. First of all, the styletude. Different from the traditional growth versus value, we actually looking at the style from 3 dimensions. First of all, it's growth versus value, and also from defensive versus cyclical, and quality versus non-qualities. So from those 3 dimensions, we kind of divide the stock universe into 12 subcategories. Then we're looking at their historical performance, like historical win ratio over the next 6 months period. Then we plug those subcategory into our quant model, our technical model, and also our EPS model. So from those 5 aspects, we get a final score of those styles. Then currently we are recommending the growth quality and the growth technicals. The second one, the seasonality, kind of follow the same kind of methodology. But instead of style, we're looking at the industries. So we plug the industry into looking at their historical performance over the next 6 months. We're looking at their ranking in our quant model, our technical model, and the EPS model. And currently, those 8 are the industries we identified that we think had a higher chance to win over the next 6 months. Then finally, PMI recovery. We have been talking about PMI in the last webinar, and after almost over 2 years under 50, we finally started seeing the PMI manufacturing start to recover above 50. Based on our research, historically, every time when PMI recover above 50, the value and the cycling sector tend to outperform. So essentially, these themes, every time we rebalance, we try to find the stocks that's within the value stocks within the cycling sectors. So again, after having those 3 short-term themes updated, along with our long-term theme, we will be able to identify the updated Granny Shots portfolio holdings. So this is the final portfolio post-rebalance. One thing I would want to mention is, we still have 35 names, but we don't really mean to keep like the fixed number of holdings. In our pro, you can see that we can go as low as 20 and as many as 50. So we have 7 deletion, 7 addition. It's not necessarily means it's always going to be 1 out, 1 in kind of scenario. Then let's talk about each of the addition. First off is a Palantir. Palantir now is in our Statute, energy cybersecurity, and the global labor supplier themes. In our view, Palantir is strongly benefiting from the AI adoption story, and also given the backdrop I've been mentioned, the government cost saving, the government efficiency improvement. I think the Palantir, in our view, is one of the biggest beneficiary here. And if you are our Fundstrat or FS Insight research client, you might know that we have been recommending Palantir as a SMID idea since the start of last year. So adding Palantir is also because the Palantir now is qualified in this kind of large cap universe. The second one is Abbott. Abbott is currently in our Style 2 and the Millennial themes. I think overall, Abbott is just a quality company with diversified product offerings, from their core diagnose businesses to nutrition like formula, which benefiting from millennial like parents, like me, and also their diabetes care segments, especially the Lingo, the blood sugar monitoring devices now doesn't really require doctor prescriptions. So for a healthy lifestyle, even a person without diabetes can also monitor their blood sugar levels for either for like food intake purposes or even for exercise purposes. I think it's just supporting a healthier lifestyle, which by the way, it's important to millennial generation based on our research. The next one is Accenture. Accenture is currently in our PMI recovery and the global and easing financial condition theme. Accenture is a leading in the digital transformation, and it could help companies to modernize their system, especially in the next wave of the customized AI adoption and also even cybersecurity. And also the firm has done a lot of strategic acquisition over the past few years. So in our view, we think a lot of energy synergy could start to materialize in the next few years. The next one is GE Vernova. We added GE Vernova primarily due to its nuclear exposure. And as you might know, that energy demand is one of the most important, byproduct of the AI and even the robotics. So essentially, like human being like me, like us, and even animals, as a source of labor, we eat food. Well, if the AI models or the physical robots come to help in our daily life, they consume energies. So we don't think the recent DeepSeek model release actually alter this bigger trend in the long run. And given the recent pullback due to that DeepSeek upheaval, we think GE Vernova is actually become more attractive. The next one is MicroStrategy. Is currently in our Style 2 and the Millennial themes. I don't think there's much for me to explain here. As a research shop, Fundstrat Research and Tom, I know we've been one of the earliest on Wall Street writing Bitcoin and the philosophy of store value and even digital gold. So although Bitcoin price now is around 100,000, we believe there are still upside to go. And also similar to Palantir, MicroStrategy has been in our core SMID recommendation since last year, and the recent addition to the major index also made MSTR qualify for this large cap ETF, and that's why we added it. The next one is PayPal. PayPal is currently in our PMI recovery and the millennial themes. If you follow our research, you might remember PayPal was actually in the original Granny Shot list when we launched it back in 2019 as a research product. It did drop out during COVID. I remember it was because the valuation was too high. The stock has gone through a long recovering process, and we just think it's time to add it back. The final one is QCOM, quality communication. It's currently in our PMI recovery theme and also global labor supplier. I think it's just a qualitative company. Earning has been good despite the concern over the slow growth in the cell phone. But I think to me, the most important behind Qualcomm is that the on-device AI processing. I mean, especially after the recent DeepSeek release, that make it more feasible. And also, I think the valuation of Qualcomm is very attractive just compared to its peers. So after all, here is our portfolio post-rebalance. We actively monitoring the change of the price action of the holdings, and I look forward to give you the update in next monthly webinar. I'll pass it back to Carrie. Thank you.
Thank you, Ken. Hello, everyone, and thank you for joining us. I'd like to share some key updates on the Fundstrat Granny Shots ETF, including growth, trading activity, and accessibility. The Granny Shots ETF continues to show strong momentum since its launch. As of February 14th, the fund is trading at $21.10 per share with a market cap of $893 million. Taking a look at the highlighted section here, it's helpful to note since its launch on November 7th, Granny has recorded consistent daily flows with no days of negative fund flows. As we engage with wirehouses and platforms, liquidity remains a key topic of discussion, making this visual a helpful reference. As shown on the right, trade sizes have increased from 2024 into 2025, with the largest trade of 1.5 million shares occurring on January 24th. This trend highlights growing investor participation and the fund's expanding availability across platforms. Note, both implied and secondary liquidity continue to support trading and cost-effective execution for investors. For those looking to invest, the How to Buy section on GrannyShots.com outlines the platforms and dealers where Granny is available. Just taking a moment to remind everyone, as a best practice, we always recommend using a limit order to optimize trade execution when trading Granny. Granny is becoming increasingly accessible to financial advisors and is now approved on Stifel, RBC, and Oppenheimer platforms. We appreciate the support of advisors familiar with our research who were instrumental in the approval process. We look forward to engaging with our community throughout the year. Tom Lee and the Fundstrat Capital team will be attending key conferences and events throughout the year. Next month, we will be at the Future Proof citywide event in Miami, where Tom Lee will take the main stage, and we plan to host a meet and greet at the event as well, so stay tuned for updates. Also, if you're an advisor interested in attending a meetup in your area, please reach out to our team. Lastly, we encourage you to visit GrannyShots.com, where you'll find a complete list of holdings, strategy insights, fund documents, weekly videos from Tom Lee, rebalance notifications, and more. To stay informed with the latest updates, be sure to sign up by sharing your email and you'll be among the first to receive Granny updates. With that, we'll transition to the Q&A and address your questions. Tom, do you think your approach to Granny is too diversified? Even if one of your positions doubles, it would only equate to approximately a 3% growth in this portfolio. Have you considered taking the low-hanging fruit out without any replacements and adding more to your true Granny Shots?
Thank you for the question. Whether Granny Shots is too diversified. There are roughly 35 stocks in the Granny Shots portfolio out of an addressable universe roughly of the S&P 500 of 500 stocks. And that means this is actually is a very highly concentrated portfolio. It may sound like a lot to you, but when you're taking 35 names or roughly 7 to 8% of the S&P and making that your bet, that in fact is a highly concentrated way to have exposure to the S&P 500.
Thank you. Okay, next question. This looks like a great question for Ken. For style tilt, could you please explain your definition of each style?
Hi, Carrie. I can answer this one. I think for style, we don't want to invent our own way of definition. Like when we talk about growth, we just want to make sure that's the same growth names that a growth manager are able to buy. So we're just using the traditional way in the industry to define style. Like for value, it's just companies with relatively lower price to book ratio, lower top line and bottom line growth. And same idea for quality. We don't want to invent our own methodology. We just using a quality company should be high ROE, relatively lower leverage, and also steady earning growth over the past 3-5 years. And for defensive technical, we generally categorize them at a sector level. For example, industrial, discretionary technology, material, energy, and financials are cyclical. Stable utility are defensive. And sector like comm services, it's really dependent on the industry. Like the traditional telecom is defensive, but the internet and media are cyclical. The real estate sectors, the residential is defensive, but the commercial is more cyclical. For healthcare, the majority of healthcare are defensive, but like biotech, it's really secular growth. So it's defined as cyclical for the biotech. Hope that answers the questions. Thanks.
All right, next question. When will you launch a SMID Granny Shots ETF? We frequently receive this question and appreciate your interest. The SMID Granny Shots strategy is currently part of our affiliate Fundstrat's research offerings, available to individual investors at fsinsight.com. As we explore future product launches, we value your feedback from the Granny community, and we want to hear from you. If you have any thoughts, we would encourage you to share your feedback via email at inquiry@fundstratcapital.com. Next question. Palantir is a new addition to Granny. Can you provide some of your reasoning for adding Palantir?
We talk about Palantir and why we're adding it, and I think Ken covered it in his commentary. But there's a lot of reasons to like Palantir. I think in the simplest terms, Palantir is a company that is one of the leading edge names in developing AI technologies and applications. I mean, they're essentially a consulting company that brings developers. Now, their client base used to primarily be just one customer, but it has actually broadened recently because their tools have been so effective. This is the reason why Palantir appears in multiple themes. Not only is it related to the labor shortage because of their ability to find essentially productive solutions and displacement of human endeavors, but it's also an important and central player in cybersecurity and energy security. So we can see this name really being important to a lot of different types of investors, and that's why it is a granny shot.
Okay, it looks like the stock selection within the portfolio is very growth oriented. Will that always be the case?
I can take this one, Carrie. It's really hard to answer the question. It's a great question, by the way. It's really yes or no. We do have a theme that designed to capture the long-term macro tailwinds. So by definition, it definitely will have more style the growth tilt. But our short-term themes like style tilt, it could favor value. So, depends on market dynamics. I think yes, given our long-term theme, it could be having more growth focused, but it doesn't necessarily mean we will always um, you know, always growth orientated. I hope that answers the questions.
Next up, I'm still unable to purchase Granny on Merrill Edge. When will it be available? I'll take this one. First of all, we appreciate your interest in purchasing Granny on Merrill and your patience as we work to expand accessibility. While Granny is not yet available on the platform, we are actively collaborating with the necessary teams to facilitate access. We will share updates as soon as they become available. In the meantime, you can always view the full list of platforms where Granny is accessible on our How to Buy page at grannyshots.com. This is a very timely question as we just completed the first rebalance. When you conduct portfolio rebalance, do you always bring constituents to equal weight?
Hi, Carrie. I can answer this one. Yes, we do. We do bring the holdings to equal weight. There are a few reasons behind that. First of all, we do not want to add any size bias to our portfolio. And secondly, I think actually more importantly that as I demonstrated earlier, our portfolio have 7 themes. Some are short-term, some are long-term. So the short-term theme does change every 3 months. And because they're designed to capture that kind of short-term market dynamics, so we do want to give them the equal way, or you can call it equal opportunity to capture the market move. That's why we want to bring back to the equal way at each rebalance.
And that concludes our Q&A. Thank you, Tom. Thank you, Ken. And a big thanks to everyone for taking time out of your busy day to join us today. Before we close, a quick reminder again to sign up for email updates at grannyshots.com. Make sure to follow Fundstrat Capital on X, LinkedIn, and YouTube. And if you would like to communicate with a member of the Fundstrat Capital team, make sure to email at inquiry@fundstratcapital.com, or you can also drop us a note on our Contact Us section of the website, and those will get to our team. With that, we will see you all in March for our next Fundstrat Granny Shots ETF webinar, and I hope you all have a great afternoon. Thank you.